What you just saw was a time lapse of Bitcoin against the global liquidity index. And that is why Bitcoin seems to have such strong ties to the stock market. It's just a matter of liquidity and availability. All of the areas where Bitcoin becomes most bullish is when the global liquidity sort of breaks above its range, such as right here in 2016, global liquidity breaks out, Bitcoin and the stock market run to their all-time highs. Same thing here. After 2018 into 2019, global liquidity has that breakout. Stock market and Bitcoin run towards their all-time highs. And it's upon these breakouts where things really start to move. If you look now at where we are, global liquidity is still sitting in a lower high trajectory. Bitcoin is up about currently 175% from its low. The S&P is up about 42% from its low. So things are generally doing well. The next confirmation we need is just the global liquidity starting to get those higher highs. And once we do start to get that, the trend begins to change, then I believe we're going to be seeing a pretty strong bull market take place for Bitcoin and the stock market. Now we're looking at the Federal Reserve balance sheet. And we have been in a period of tightening, which is resembled by the balance sheet coming down. And experts have been discussing the $7.4 trillion target for QT, which is right here. We are pretty much right upon this zone, which means that QT may be coming to an end very, very soon. And this is the final stretch, really, going into the first quarter of this year, most likely. And if you look at the S&P, it's actually starting to diverge away, and Bitcoin also starting to diverge away. But it really depends on economic conditions in terms of where QT is going to end. It could be 7.4, it could be lower here. It could continue on depending on how things go. Now, if we pull up the Fed funds rate, it doesn't always require interest rates coming down and the balance sheet going up for a bull market to take place. If you look back at 2015 into 2017, when the stock market and Bitcoin were really, really bullish, the Fed balance sheet was pretty much flat for all of that time. And the interest rates were going up for the entire bull market. That is because the Fed was acting in a way that was very predictable. They said what they were going to do, they did what they said they were going to do, and everyone kind of was able to predict the Fed's behavior with the increase in rates, the balance sheet remaining flat. When the Fed's behavior is predictable, markets tend to perform well, even with a flat balance sheet and a rise in rates. There is no one size fits all for this kind of thing. Economics is always very complex, and right now we have a decreasing balance sheet with rates beginning to pause, and the S&P and Bitcoin are both trending to the upside. If we start to see the balance sheet flatten out once again, and we start to see the federal funds rate tick down, well, that could incite a lot of bullish speculation. And this is kind of what everybody is waiting on right now, or actually attempting to front run, right? Because we're still in QT, the interest rates are still at the highest level yet, but the markets are really rebounding quickly. But these are the factors in the macro that I'm looking at right now. This is what I'm waiting for. Now, switching gears over to Bitcoin, what you may have noticed this past year was that the anticipation of the ETF approval had a much larger effect on the market than the actual approval. From June of 2023, when BlackRock announced their application, to where we are now, Bitcoin saw, I guess you can mark from the low to the high, 96% to the upside. But when we actually got the approval, nothing really happened. And that is because anticipation in markets usually has a much bigger effect in general than the actual event. The 2024 halving is coming up in 3 months. And if you were to look back at previous cycles, what do we normally see? We normally see that moving into the halving, there is a general uptrend, such as the first halving, we are following this uptrend line. And then after the halving, things become exponentially more bullish, parabolic. Move towards that second halving, it's just about the same deal, following this uptrend line. And somewhere after the halving, things become exponential, parabolic. And if you move to the third halving, well, this is a bit more of an anomaly because of the global pandemic, but generally speaking, low, higher low, and during the halving, even higher prices. So we're following general uptrend, depending on how you want to look at it. And after the halving, we get exponential, parabolic. And this is also following that global liquidity cycle that we were looking at in the beginning. Right now, Bitcoin is doing the same thing. This is no different. Bitcoin is following this uptrend. We have the halving coming up. The only question is whether Bitcoin is going to be going up into the halving or down into the halving. It's possible that going into the halving, we have that anticipation. So the markets is trending up going into the halving, and then a little bit of a sell the news event before going parabolic, such as all other cycles. In the event that Bitcoin trends up into the halving, that opens up the door for a sell the news event, a little bit of a downtrend after the halving. And if Bitcoin were to downtrend into the halving, that's likely going to usher in demand for the halving, and it will actually be a buy the news event. So regardless, I think after the halving, the price may actually still be somewhere around where we are now, whether we go down before the halving or up before the halving. I think that after the halving, I don't think we're going to be changing too much in terms of where we are. Just about every other cycle has shown us that months after the halving, things become exponential. That is likely going to be tied to the global liquidity cycle. So if we start to see QT ending this year, we start to see global liquidity rising this year, rates coming down, well, we're probably going to start to really punch up and get exponential moving into the second half of this year. And to be a little bit more specific, this was one of the posts I made on Twitter recently, which is a chart just showing that if Bitcoin were to trend up for the halving, like I was saying, come down and kind of tap the same price levels that we're at right now, this would be, I think, more so along the lines of what takes place going into and after the halving. You know, if the trend remains our friend, we're likely going to be seeing upside anticipation, demand for Bitcoin, and everybody that wants to buy before the halving is going to buy before the halving. And that likely puts a short-term cap on the growth we see for a short-term pullback, and then we get more willing market participants to get into the market, and then we start to see all of those macro factors start to play in. Then we can get the real all-time high break that we've all been waiting for and looking for. And we're going to be keeping an eye on all of this and more on this channel. Also, be sure to join the Patreon. As the cycle starts to pick up, the prices for Patreon do increase, but you can lock in these prices for a lifetime by joining today, now. So be sure to subscribe, hit the like button, and I'll see you guys in the next video.